So a guy with a verified IQ of 276 just publicly said XRP is at the start of something that most traders haven't even considered yet. And at the exact same moment he posted that, three completely separate signals, one technical, one candlestick-based, one pulled straight from on-chain data, all fired on the XRP chart within the same window. Now here's the question nobody's actually asking. Is that timing real, or is it just the market making noise that sounds like music? Stick with us, because by the end of this breakdown, you'll have enough information to answer that yourself, and the answer might genuinely surprise you. Who YoungHoon Kim is and why this isn't just hype. YoungHoon Kim isn't a crypto influencer. He doesn't have a merchandise store or a Discord server with a paid tier. He holds a verified high IQ record at 276. When someone with that kind of documented background steps into a conversation about market cycles and names a specific asset, the reasonable response isn't to immediately agree, but it also isn't to dismiss it without looking at what the data underneath actually shows. Before we go further, it's worth being clear about something important. YoungHoon Kim's comments represent a personal opinion and should not be interpreted as investment guidance or evidence of future XRP performance. That said, Kim went on X and stated that the XRP supercycle is only just beginning. That statement didn't spread because people blindly follow him. It spread because it landed at a moment when the data underneath XRP was already shifting in ways that serious analysts had been quietly tracking. The timing of his comment relative to what was happening on-chain and on the chart is what made it land. That convergence is what we're here to unpack today. What a supercycle actually is, and why the definition matters here. Most people use the word supercycle and mean a really big pump. That's not what the term actually describes. A supercycle is a sustained multi-year expansion phase driven by structural forces, not short-term sentiment. These cycles don't peak in a few weeks. They build over years, driven by compounding adoption, institutional participation, and macroeconomic shifts that gradually pull capital into an asset. The reason this distinction matters for XRP specifically is because the historical data actually supports this kind of cycle structure for this token. Technical analyst ChartNerd TA pulled cycle data going back over a decade and found that XRP's movement from one major cycle peak to the next has averaged 3 to 5 years consistently. That's not cherry-picked, that's a recurring structural pattern across multiple market environments. If the current cycle bottom is forming through 2026, the math puts the next potential major top somewhere between 2028 and 2030. That's the thesis on the table, not a moonshot prediction, a historically grounded framework that happens to match what the chart is doing right now. The real market picture, fundamentals worth understanding. Before we get into the three signals, it's worth spending a moment on where XRP actually stands as an asset right now, because the fundamentals have shifted in ways that a lot of casual observers haven't fully absorbed. The token is trading near $1.05. Market cap holds above $65 billion. Daily trading volume remains consistent and active. Ripple's legal situation with the SEC has evolved significantly compared with previous years, though regulatory and legal developments can continue to affect market sentiment, and that's always worth keeping in mind. Market participants continue to monitor institutional interest and XRP-related investment products as the broader landscape develops. And Ripple's cross-border payment network keeps expanding. New banking corridors, new country-level deployments, new institutional partnerships building out the infrastructure that gives XRP a real-world function beyond speculation. The fundamental picture around XRP in 2026 looks meaningfully different from what existed in prior cycles. That context matters when evaluating what the technical signals are pointing toward. Signal 1. The TD Sequential and what it's actually telling you. The Tom DeMark Sequential is one of the few technical indicators that professional traders take seriously, precisely because it's built around exhaustion rather than momentum. Most indicators chase price. The TD Sequential tries to identify when a trend has burned through its fuel. When the indicator prints a 9 on a daily chart, it's identifying a point where a directional move has likely run its course and a reversal window is opening. Analyst Ali Charts flagged a fresh TD Sequential 9 buy signal on XRP's daily chart this week. Historically, these signals precede relief rallies that play out over 1 to 4 candles on the time frame where the signal prints, meaning for a daily chart signal, you're looking at price movement over days to potentially a couple of weeks. This isn't a prediction of a sustained bull run. It's a signal that short-term downside pressure may be exhausting. In isolation, that's useful but not definitive. In the context of what the other two signals are showing, it becomes part of a much more complete picture. Signal 2. The Morning Star Doji and the support zone it formed on. The Morning Star Doji is one of the oldest and most recognized reversal patterns in technical analysis. It's a three-candle formation, a strong bearish candle, followed by a doji, a small-bodied candle reflecting genuine indecision, followed by a bullish candle that recovers significant ground. The story those three candles tell is straightforward. Sellers were in control, then they ran out of conviction, and buyers stepped back in. That exact pattern formed on XRP's chart across 3 recent sessions, and it didn't appear at a random price level. It formed right in the $1.02 to $1.07 zone, a level that has been tested and defended multiple times in recent weeks. That repeated defense is what gives a support zone its credibility. A reversal pattern forming at a random level is noise. The same pattern forming at a zone the market has already validated as significant is a technically meaningful development. The combination of the pattern and the location is what makes this worth tracking, not just the candlestick shape on its own. Signal 3. The on-chain data that shifts the conversation. The third signal is the one that deserves the most attention, because it doesn't come from chart interpretation, it comes from what people are actually doing with XRP on the blockchain. On June 14th, XRP's network recorded roughly 23,000 daily active addresses. Within days, that number climbed to nearly 39,500. That's a significant jump in a short period. Daily active addresses represent unique wallets engaging with the network, sending transactions, receiving funds, moving assets. Some analysts interpret rising on-chain activity like this as an early sign of increasing network participation, separate from speculative positioning on derivatives exchanges. When on-chain activity grows like this while price is still compressed near support, it can indicate that demand is building before it fully shows up in price. The on-chain address surge doesn't confirm a rally on its own, but it does make the technical signals from the TD Sequential and the Morning Star Doji harder to dismiss as isolated noise. Why the timing of all three matters more than any one signal alone. Here's what makes this week stand out from a typical week of XRP headlines. Each of these three signals, the TD Sequential 9, the Morning Star Doji at support, and the on-chain address surge, measures something completely different. One is a momentum exhaustion indicator. One is a price action structure. One is network behavior. They're measuring the market from 3 separate angles using 3 separate data sources, and they're all pointing the same direction at the same time. When multiple unrelated indicators converge on the same conclusion, analysts call it confluence. Confluence is what separates a signal worth examining from one worth ignoring. A single indicator pointing up while everything else is neutral is easy to set aside. 3 independent signals from different methodologies pointing the same direction at a defended support zone, while a notable public endorsement is gaining traction, is the kind of alignment that experienced traders specifically look for. This week produced that alignment for XRP, and that combination is genuinely uncommon. What still needs to happen? The honest confirmation picture. Nothing here is a guarantee, and it wouldn't be accurate to present it as one. Signals are probabilities, not certainties, and the market has a way of resetting anyone who stops respecting that distinction. So what actually needs to happen for the bullish case to be validated in the near term? 2 things primarily. First, XRP needs to hold above the 1.02 to 1.07 support zone consistently, not just bounce off at once, but build from it with real buying volume behind the recovery. A single wick low and a bounce isn't confirmation. Sustained price action above support with volume behind it is. Second, traders are watching the 1.30 level as the first meaningful technical hurdle above current price. A clean move through 1.30 on volume would signal that buyers have taken short-term control and that the reversal signals have followed through into actual price behavior. Until both of those conditions are met, the signals remain promising but unconfirmed. Watching for those 2 things specifically is how you stay grounded without getting ahead of what the data has actually shown so far. How the short-term setup connects to the long-term supercycle frame. One thing that often gets lost in these discussions is how near-term technical signals and long-term cycle frameworks actually relate to each other. They're not the same conversation, but they're connected. The TD Sequential signal, the Morning Star Doji, and the on-chain surge are all short-term developments. They're pointing toward what might happen over days to weeks. The supercycle thesis and the 3 to 5 year cycle data, that's a multi-year framework. The connection between them is straightforward. Every long-term trend has to start with a near-term inflection. If XRP forms a confirmed low here, clears $1.30, and begins building upward momentum while on-chain activity continues to grow, this period could eventually be seen as the early stage of the larger cycle. That's not a prediction. It's a logical sequence grounded in how markets have historically developed. The short-term signals identify where a potential starting point might be. The long-term thesis describes where the structure could go if it holds. Right now, both frames are pointing in the same direction. Why the narrative environment around XRP has shifted. It's worth addressing something that doesn't get enough attention in XRP coverage. The environment around this token in 2026 is structurally different from what existed in prior cycles, and that difference matters when evaluating whether a supercycle thesis has any credibility behind it. In 2017 and 2021, XRP's rallies happened despite significant headwinds, legal uncertainty, limited institutional products, and a market driven largely by retail enthusiasm. Those tailwinds eventually reversed, and price came back down hard. The environment now is different in ways that aren't superficial. Ripple's legal situation with the SEC has evolved significantly compared with those earlier years, though regulatory developments remain something to monitor going forward. Market participants continue to watch institutional interest in XRP-related investment products as that space develops. And the global conversation around faster, cheaper cross-border settlement is growing. XRP sits at the intersection of several of those developments in a way it didn't in previous cycles. That broader shift is part of why analysts are framing this cycle differently, and why the current technical setup is drawing more serious attention than typical short-term noise. What retail observers often miss about these setups. One pattern that shows up consistently when studying how significant moves develop in crypto markets is that the setups that matter most are usually the quietest ones leading into them. The signals that precede the largest subsequent moves tend to appear before the crowd notices them, not when headlines are already screaming about price targets. That's part of what makes the current XRP picture interesting. The token is sitting near $1.05, not making major news for a price surge. But underneath that, three independent signals have fired. On-chain activity has risen sharply, and someone known for holding a verified high IQ record has publicly named XRP as his supercycle bet, while being clear that this represents his personal view and not a market prediction anyone should act on without their own research. The broader retail crowd largely hasn't arrived yet. Historically, that's when technical setups tend to be cleanest, before the noise makes it harder to see the structure clearly. The most useful thing this breakdown can leave you with isn't a price target. It's a clear framework for thinking about XRP at this specific moment. The short-term technical and on-chain picture is more constructive than it's been in recent months. The two levels worth watching are $1.07 on the downside, holding above that level matters for the near-term picture, and $1.30 on the upside, where a confirmed move with volume would shift the short-term structure meaningfully. The longer-term frame, if the historical cycle pattern holds, points toward a potential major top somewhere between 2028 and 2030, with the assumption that a cycle bottom is forming now or in the near term. None of this is financial advice. All of it is based on real data, real cycle analysis, and real on-chain behavior that you can verify independently. What you do with this information is entirely your own decision. But understanding what the signals are, where the key levels sit, and how the longer-term thesis is structured puts you in a better position to think clearly about XRP than most people watching from a distance right now. Close, direct, and grounded. That's the full picture on the XRP supercycle discussion, the three bullish signals, and the data behind both. As always, nothing in this video is financial advice. Do your own research, check the sources, and make decisions that reflect your own risk tolerance and situation. If something in this breakdown shifted how you're thinking about XRP, drop a comment below, specifically whether you think the short-term signals will confirm or fade. That kind of real discussion helps us build better content. Subscribe if you want this kind of data-first breakdown every time something significant moves in the XRP space. We'll see you in the next one.